Hi, and welcome to the Rags to Riches show with myself, Terry Blackburn. Now, today's guest is a good friend of mine, a fellow guy from the Northeast. Always good to have a Northeast guy in the show. He's went from carpet fitter, joiner to running a packaging business nationwide, which arranged £1.2 billion worth of mortgages, to actually the head of Precise Mortgages, one of the directors, which I'm sure you're all aware of, Precise Mortgages, to winning countless awards. He's just an all-round great, knowledgeable, experienced guy. He's got a portfolio himself. It's going to be a fantastic episode filled with knowledge, lessons and learnings. Really excited for it. So welcome to the show, Roger Morris.
Morning, Terry. And thank you for everybody who's going to hopefully watch this recording.
Yes. It'll be a great episode, Rog. I've heard Roger speak numerous times on stage at various financial services events. Roger's been in the financial services world a long time. Speaks really well. He's got some he's got an interesting story, but also I think some real good views and opinions on what's to come for the property space. So thanks for going on, Rog. Could you just tell us a little bit about your fascinating story, going from what you were doing to then running a big business to then sort of elevating Precise Mortgages to where it was when it was sort of floated? That'd be great.
Yeah, Terry, I think when you actually look back at people's stories in life, that I think I find quite inspirational. It's where they weren't born with a silver spoon in the mouth. They didn't get the benefit of private education, or specifically that they weren't academic. I always have a real classification between what do I hold the biggest value in, sort of being academic or common sense. And I think my philosophy of life has always been is you can always employ academia, but you can't employ common sense. In other words, if you've got the ability to understand what you need and change your life, you can find those intellectuals around you who don't maybe are blessed with common sense. And my journey was right from a young age, Terry. No one's ever really believed in me. My mother used to say when I'd come home with my report card in my hand, I can just see now in junior school, and she'd say, Roger, do I need to read that? Or is it straight to your bedroom? And that was it. I just said, Mum, it's just the same as it always was. And when I was growing up, my mother and my family and my teachers used to say, Rog, you will never amount to anything. And I always use those words because I always felt that if you put your mind to anything, you could achieve anything. And I thank all those teachers, Terry, who kind of were never enthusiastic about me. And I can remember in my early days as a fireman going through my probation, and the station officer at the time looked me in the eyes and said, Rog, the best you will ever achieve in your life will be a good fireman. And I think when opportunities come your way and you're able to grasp a moment, when I was offered to go into mortgages in 1994, the guy who offered me the job said, you could sell mortgages, Rog. I was driving a lorry 2 weeks ago, because then to do mortgages, Ted, it's a 2-day sort of like process. You know, you came in as a fireman, 2 days later, you were qualified as a mortgage advisor. And I remember going to see my wife at the time and my father and saying, I'm going to train as a mortgage advisor. And they both laughed. They were like, you, mortgage advisor, you need to be intelligent. You'll never do it. And it was that positivity of them laughing and going, you won't do this. And I think all the way through my life is you won't do this. When we launched Precise Mortgages, everyone was like, never heard of them. You'll never compete in the mortgage market, particularly the specialist market. And what you do is you collect a group of people who believe in making a difference. And what you can achieve with positivity, Terry, is just incredible. So if, for instance, if I was coming to see you now, let's just say you were in Newcastle, we're going to meet and we're going to have a coffee down the quayside. I'd put in, you'd give me the postcode. and I would get there because I would follow that postcode. What happens along the way is irrelevant, but my destination would always remain, I need to be in the town with you to have a beer down at the quayside at 3 o'clock this afternoon. And I know if I set off in plenty of time and no emergencies along the way, and even if you can divert off and go through the smaller road, I'd get to you. And that's my life's philosophy. You must always have that end destination.
Yeah, I think that's powerful. And what you've said there, being a firefighter in business, you're kind of a firefighter as well, and you're just putting out fires a lot of the time. Let's be honest, you're just dealing with issues as a fireman. But I think what I took from what you said there is just knowing where you want to go, believing in yourself when others don't. And I really like the academic and common sense thing. And we all know people who are really, really academically intelligent who are doing very little with their life. Right? And we know people who wouldn't admit that they're not academically that intelligent, but they're achieving massive things.
Yeah, I remember being in office in Teesside, and at the time I employed 76 people, and I have dyslexia, so I do get my words jumbled up. And I remember it was about 5 o'clock on a night, and there was two guys there, Steve Gibson and Matthew Strike. If you're both listening in, you'll remember the story. And I was trying to work out in this sentence which two I needed to spell, because as a dyslexic, and by the way, for everybody who doesn't know out there, there's 3 ways to spell two. Go figure that. 3 ways to spell two, right? So I was trying to work out which one it was. I was pretty sure it wasn't the one with the W in. And Steve Gibson just laughed and he says, I can't believe someone is as thick as you runs a business like this. And I said, you must really think you're intelligent. He says, I do, I've got A-levels. And Matthew Strike jumped in and said, Steve, who's the most intelligent, you or Roger? Because you're the employee and he's the employer who has 80 odd people making millions of pounds. Who's the most intelligent? And I just thought, wow, that was just because what Matthew then went on to said was, when you've got common sense and you have a clear vision of what you want to achieve in life, you can easily employ intelligent people. And it's about being honest, and it's about knowing where your weaknesses are. And I always remember that when I was being interviewed as sales director right at the beginning with Precise Mortgages, Ian Lonergan, our CEO at the time, said, Roger, you're a pretty impressive candidate who seems to really be confident in every area. You must have a weakness. And it was always, I just get my words a bit jumbled up. And sometimes when I write emails or messages, I like to, and I have the confidence, Terry, to go, Terry, I'm going to post this on LinkedIn. You just read it for me and just check it's okay. And that's the bit in life, is nobody is perfect. But what you've got to do is have a team of people around you that trust you, that have your back, that have the same shared integrity and shared views and shared vision. And if you've got people around you saying you can't do that, then listen to what they're telling you, which is you can do that. But what you want to do is try and is listen to that negativity and then box it away. Don't be permanently surrounded with you can't do it, you can't do it, you can't do it, because you can achieve anything in life. And Terry, you are the absolute epitome of that. You can achieve anything if you put your mind to it.
Thank you for that, mate. I appreciate you saying that. And what a good chat before we went live, didn't we, about something similar. But something just came to mind when you said that there. All the successful people I've interviewed, I know you'll be the same. You know, a lot of wealthy people. I've often asked people, how did you get here, and what was was there a turning point, was there a catalyst, was something big, what happened, how did you get here? Not one of them has ever said it's because I stuck in at school. Not one of them has ever said that. So what does that say? And I'd love to meet someone who's achieving massive things in business or life, and you ask them the reason why, and they say it's because I listened in science. Like, no. But anyway, we're digressing.
No, it's so true. I never stuck in at school. I had lots of part-time jobs at school, Betterware, selling plants, and something else which I won't go on to a live bit. Wasn't drugs, by the way. but it was about, I was too busy working and making money to actually learn the school. And what I would say is it wasn't that changed your life. It's about seeing an opportunity, realizing the opportunity, and then seizing that moment and going for it without distraction.
Love that. Love that. Just a couple of questions around, so your packaging and distribution business. Don't know too much about that. I know it was really successful at the time. Is there any key lessons or key bits of advice, you know, from yourself that you'd like to share, that you learned throughout that, building it from scratch to 80 odd people, to then understand? I don't really know what happened. Don't have to discuss that, but I think it was 2008 credit crunch kind of screwed it up, I think. Sorry if that's incorrect. But yeah, any views, any key lessons you'd like to share from that business experience?
Yeah, absolutely. So in 1995, when I was about a year into mortgages, and I realized very early on, it was just breathtaking. I was with a group of people in MCA in Newcastle, and this was a mixture of people with different backgrounds doing mortgages. And you go out into someone's house in Newcastle, where I served my time, and you'll be with a family, and they'd have, nobody is perfect. Nobody is on 60 grand a year, wanting 120 grand mortgage on a 300 grand house, been in the job for 50 years. There's always a story. There's always an issue. There's always, well, what do I do with this? And what I realized is everybody I worked with, Terry, nobody recorded anything. Everybody would ring up the lender and ask the same question week after week after week, because they never recorded it. So what I did was I started to create yes and no sheets. So there'd be a question and it'd be yes or no on what lenders. And then I just kept this updated and had this book of huge amounts of information. And it was one of the UK's first ever mortgage desks. And I turned MCA into what was a national packager by literally recording facts. It was as simple as that. And because of that, I realized, because I wasn't getting the right money, why don't I do it myself? So at the time, we had lots of lenders coming over from the States. We had the likes of GMAC and Platform and Southern Pacific. And I realized that if I got their agencies and I created a mortgage desk and I recorded information, a business would flourish. And EM Financial, which was the ultimate packager business I had, Terry, had 140 people work for me. 36 lender on site. So what happened then was all the lenders we had, they offered the mortgages there and then in our offices. And we also had 3 correspondence lenders, which was basically myself and a couple of other packagers. We had a lender that would originate and on completion sell to somebody else. And I was doing about 1.2 billion a year that time, 2007, a year. So we're taking in we're completing about 120 million subprime mortgages, and it was subprime then. And I had a real high-level conversation with a big American bank in the April 2007 to sell my packager for millions. But I had a feeling September 2007 would be memorable. I just had this feeling. So I decided not to take the offer, Terry, and wait. And then in 2007, in the September, when Northern Rock had the queues and the funding crisis, the American banks basically just collapsed. And by the 2008, I had to lay off every one of my staff and sit with them face to face. And it was me and my daughter, Heather, who was just a rock. We had to work through that whole process. But what it teaches you is when adversity comes, Terry, is the true value of wealth. What I realized at that time, I was one of the richest people I've ever met when it comes to happiness, love, and support. And ultimately, that's what matters in life. It isn't having millions in the bank. It's smiling at a bird on a morning on a tree who's singing its little song, or the sunrise coming up. And I had so many texts and phone calls of people going, Rog, are you all right? And I'm going, Terry, I know I owe you 3 grand. Forget the 3 grand. I've made a lot of money after your years. Are you all right? This isn't your fault. This is the banking crisis. And to all those brokers, friends, colleagues, staff, family who stood by me, got me through a very tough period of my life. It wasn't the toughest period of my life, but what that then does is the financial system reset. It's now capitalized, it's now liquidized. You can't chop up all these mortgages and keep selling them on. And we now understand what is a safe, secure, and affordable financial service business. And if you look now, right now, with the funding crisis and the interest rate rises, one, interest rates are not rising at the moment. They haven't risen for a long time. They were put into an emergency measure. And this is what a lot of people forget, is interest rates should never have been 0.1%. That was for an emergency. They were always supposed to have been 2.25%, 2.5%. So once we have the next rise, if it takes us to 2.5%, that's what it should have been all the way along. So anybody who's going, why are rates rising? Well, I haven't yet. Now, the concern and the bit which no government can predict is the world is shrinking. And what's happened in Ukraine is driven up inflation, it's restricted energy, and it creates uncertainty. And markets don't like uncertainty. So this anticipation of where we think the market will go when it comes to rates is, there will be with inflation and the fuel issues, interest rates with inflation will rise, but then they will settle. And if it wasn't for Ukraine, I think you'd have seen a base rate around 2%, and that would have become the new norm. But it's about unpredictability of what happens if something else happens in the world that affects the economy when it comes to that rate and those margins. But what I would say is we've got the safest ever banking operation this country's ever seen. We've got liquidity. We've stress tested for this to happen. So we know what's going to happen. It's just this volatility, which was a sweet spot, which was created because of the way that people were happening to play against the sort of short-term selling of the pound to make money. So when we saw interest rates, the pound drop, and we saw these spikes in swap rates, it's where the city were betting against the pound just to make a load of money. So there's a lot of traders made a lot of money, and that was a negative situation to most families. And we've got to find a way of not regulating against that, but that to me wasn't necessarily good karma. But we are now starting to see things settle, Terry, but I still think we're going to be a year of uncertainty before the market finds or starts to find its new norm. By 2024, I think we will be in a much more stable financial sort of period, or that's what I'm hoping for, because it's so easy to talk a market down. Interest rates will go at 8%. There'll be a housing price stop. I mean, I've been through loads of recessions. There was going to be a housing price crash in 2008, never happened. There was going to be one in 98, never happened. There's going to be one in 90, it didn't happen, because property is something which is tangible. If you've got something that you know is worth 200 grand and you're going to sell it today and I'm going to give you 150, you don't sell. And it's as simple as that. There'll always be a few examples of people who've lost on property, but there'll be always significantly more, Terry, that gain when it comes to property.
Yeah, definitely. Again, some great points there. People are always going to want somewhere to live, regardless of what's going on in the economy, regardless of what rates are. Like, rents are going to go up if less people can afford to buy. And you rightly said there, they've been stress testing this at 5.5%. The lenders have for many years. So if you can't afford it at 5.5%, you shouldn't have had the mortgage in the first place, right? But people aren't talking about that, and the media are just blowing this up to be something that they're not. That it's not.
Most landlords, Terry, who are established in this marketplace, bought property when it was 7% base rate, and since then have seen great equity growth. So not only were the business bought at 7% base rate, they've had huge equity increases, which has further reduced the borrowing. Those that just never read the memo that interest rates had to go up, who bought recently on a high rate in personal names, will have some very tough consequences. But the market will then simply, the likes of you and me will step in and buy those properties and rent them out. So the buy-to-let market is in a better position than it's ever been. There's more people in this country than ever before. We're building less houses, got an increase in divorce. We're bringing in asylum seekers. We're bringing in foreign nationals. Our country is growing and it will carry on growing. We need more people because we've got more jobs than we've got people on the door. And if you look at the buy-to-let sector, when I put houses on at the moment, I'm getting an average of 13 families per property. And that, if the property's right, it's clean, it's safe, then you will always rent properties. There'll always be a demand.
Yeah, 100%. And again, the media never seem to talk about that. They only seem to talk about the negative things for landlords and investors. So just focusing on that point then around rates and around mortgages. You've obviously operated a high level for Precise Mortgages. I think you were there 11 years. Was that right?
Yeah.
11 years. You've seen a lot of growth in that time. You're highly involved with the people that create the products and everything like that. So what do you see for the future of mortgages in terms of, is any product changes, LTV changes? Obviously, we've talked a little bit about rates, but what do you see happening to mortgage products?
So there's two aspects of this. One is residential. So with residential, we have to ensure that the mortgage is affordable and sustainable. So what a lender needs to do is to predict where they think interest rates could likely go to with a lot of imagination, and to make sure the stress test is built in for that. If you don't, Terry, and a few years down the line when interest rate rises and you go for possession of that property, the judge will go, well, what account did you take of future increases in rate rises? So from a residential point of view, there's a huge pressure to ensure that the mortgage is sustainable and affordable. When it comes to buy-to-let, the stress test rate dictates the LTV and the return. So the higher LTVs will be easier met by HMOs, houses of multiple occupancy, because there's a bigger rent roll, ignoring the challenges of increasing costs like heating. But when we look now at where we're going to get over the next 2 or 3 years, because I think at the moment you'll see statistically the highest fixed rates now or in the next 6 months, and then they'll be like this for the next 12. But if you were looking ahead at what fixed rates will be in 3 years' time, 4 years' time, will be lower than where they are now. And your problem you've got is properties in the southeast of England, Terry, where you've got low yields and high mortgages, they won't fit. So what you'll see lenders doing is offering lower fixed rate mortgages, but with a 3% fee. What that 3% fee does is allow you to have a lower pay rate to make the affordability fit to get you over the next 5 years. And as much as no landlord likes higher fixed rates, it's the difference between making the payments affordable and profitable, your net profit from the property after your expenses, by having that lump sum, that higher lender fee allows you to get through this next 5-year period. And then in 5 years' time, if interest rates are still high, you either have to maybe sell some of your buy-to-lets and bring down your overall loan to value to get better rates. But I think that's what you'll see lenders doing, is lenders will offer lower fixed rates than you would normally see, because they've made the margin back on that say 3% fee.
Yeah, that's a good point. And I never thought about that, about the actual arrangement fees. What's a typical at the moment? It does vary, doesn't it?
Yeah, about £1,000, because a lot of landlords are against the lender fee because it eats into the equity. If you're outside of London, your equity growth can be zero. If you take take Stockton, let's not go Newcastle. Newcastle's posh, everyone. You go Stockton. My portfolio hasn't really grown in the last 20 years in equity position. Birmingham, slightly different. But having that lender fee can make that difference. But what you got to remember, it's a country of at least two halves. London, where we're seeing rents rise, and the reason rents rising so high in London, Terry, isn't because of supply, it's the fact of George Osborne's announcement of interest relief. So if you've got a buy-to-let in London, you're a high rate taxpayer, you've got to move it to a short-term let. The reason you move it to a short-term let is you can offset the interest, and you can actually command more for people who want to rent the house for a week. It's illegal for most people to do that because the mortgage contract doesn't allow you to rent on a short-term basis. So it means you're not insured even if you are insured. And Sadiq Khan is against properties being rented on a short-term let basis. That said, 1 in 40 properties in London is rented on a short-term let basis, which is reducing the supply from the long-term market, which is inadvertently increasing rent. But within 2 years, they'll have outlawed completely the ability to do short-term lets in London as we see today, similar to what they've done in Edinburgh, because the only way they can bring rents down in London is to stop short-term lets.
Oh, I didn't know that. So how are
when
they
you
going to do that?
understand it is the problem.
And how are they going to do it? Because I know I've got friends who've got Airbnb properties short-term let in London. How is there a 90-day rule or something already? But then are they just going to say you're not allowed? Is that what you think?
Well, there'll be all sorts of challenges and risks, but what they'll do is you'll need planning permission. For instance, so the Deregulation Act of 2015 makes it, if you do rent your property out for more than 90 days, it is illegal in London, right? Now, there'll be an element of common sense. So if you've got a house near Wimbledon, you might want to rent it out for 2 weeks. Is that really a problem? Not really, unless you're a hotel in London and you're going, it is a problem. But what I think you'll find is under the selective licensing rules, which is now virtually encompasses London, they'll bring in some form of enforced regulation, because people who do short-term lets do it all year. And what they're doing is this, they take more and more properties off the market of long-term let. That's what driving the rent up. Because if you went down to COVID, Terry, London's rents were at the all-time low during COVID. Why was that? It wasn't because people moved back to Newcastle, Teesside and Birmingham. It was because the short-term let market went, gosh, we can't rent our properties out, so let's put them on long-term. So the highest ever amount of properties became available to rent in London. And it was just, there was more supply than demand. And as soon as COVID finished, all those properties went back to short-term let. And nobody's really talking about that. So it's understanding about what you can do and what's maintainable and where's that market going. So if you're in the short-term let market, there's a number of factors you'd need to think about. Will your current lender allow you to do short-term let? Because there's no point insuring your property if they won't, because when something bad happens, the insurance company will ask to see the current AST and the copy of the mortgage condition. And if you're a short-term let, you may find yourself got some problems.
Yeah, it's an interesting point, and I think you're right. Not many people are talking about that. People will just be, cracking on doing the short-term lets for the extra profit, and you can't blame them to a degree. But people need to be a bit more careful of that and aware of that.
Yeah,
for sure. We talked a little bit about opportunity. So where do you feel there is an opportunity? You know, whether we like it or not, the transaction levels are going to drop a little bit currently because of the rates and because of the media. Maybe it's not going to be as much as the media say it's going to be. But do you see any main opportunities for property investors at the moment to purchase in particular areas or particular types of properties, or any particular strategies that you think would work at the moment?
Yeah, understanding, and I'm going to be clear about this, Terry, understanding the consultation. Now, consultation, I don't need to get you to get a dictionary out, means we're having a debate. There's been so many lenders saying that from April 2025 to rent a buy-to-let, it must have a C rating. Well, that is absolutely rubbish, because that consultation, second reading in Parliament, still hasn't happened a year later on. So the government is rethinking what's appropriate to do when it comes to the buy-to-let market. And we don't know. What we do know is, if we track forward, is ultimately properties need to aspire to a C rating. We know that there's going to be an increase in population, it's going to carry on growing. And we know because as interest rates rise, the consequence is less people will be able to afford to buy property. And therefore, the consequences for the long-term opportunity for the buy-to-let market is better than it's ever been. If you're looking from a profitability point of view on a long-term investment, would be 10 or 20 years, what do you need to invest in that property? So if you take 10 years, what may go things like boiler, double glazing, these are the kind of things you need to predict. My strategy is new build. So I'm looking at 2-bed houses. And from my survey, 2 beds a sweet spot. 1's too small. 3 can be sometimes too expensive either to be able to buy or the demand. So 2-bed, enclosed garden. With the Tenant Reform Act, people now want to work from home, have a safe place for the children to run around and maybe have a dog. And they want car parking at the front for 2 cars that can plug into electrical sockets. We're talking over the next 10 years. New build properties don't come with any investment required for the next 10 years when it comes to EPC ratings. So I can actually look and think, right, if I'm buying now, today, even with fixed rates at 6%, what loan to value do I need to be at? Most likely buying a limited company. You've got then the builder maintaining the property for any major expense in the next 10 years. You can actually look at what your profitability would be. It's lesser so with your Victorian properties, Terry. So the opportunity in the buy-to-let market is definitely new build 2-bed houses, not flats. And then the other area would be HMOs, where you've got digital integration with heating supplies to make sure it's energy efficiency, or what you're doing when it comes to the short-term holiday lets or short-term lets itself, or you diversify into the areas that you've done with glamping. But my own personal strategy for the mass market, simple, light touch, is new build, 2-bed, semi-detached properties. That's where I think the biggest opportunity comes from, and where you will have a guaranteed market, Terry.
Again, I think that's it's a different angle that I haven't heard many people talk about. I've always shied away from new build because you typically paid a premium. In capital growth, it doesn't really occur because you buy a bit of a premium, don't you? But you're completely right. If you're looking at that over, I always remember looking shorter term, but if you're looking over 10 years, you'll get that capital growth more than likely, and certainly your costs are going to be reduced. And there might be some deals to be had if house builders are behind on targets because less people are purchasing. There might be some deals to be had.
Yeah, we have to be careful we don't go back to 2007 when Mortgage Express went down, where we got a little bit too involved in getting deals with builders. What I would say is I truly believe there's a new build premium now, but it's the opposite. It's positive, because if you take a Victorian terrace, you're going to have to spend quite a lot of money on it to keep it legal. And possibly it could be, I'm estimating a Victorian terrace could be as much as 30 grand investment needed over the next 5-7 years. Might be 15 grand, depends if the tenants are on benefits, there might be support. But with new build, there's no investment. You know that you're going to be able to rent that property out, and you get more rent because there's a new build premium on rent. So I don't no longer see that you're paying 5% just because it's new build. I see the opposite long term. The sites I'm buying on at the moment, Terry, it's about 50% of landlords that are buying, because the writings on the wall is it's the most sustainable long term from a spreadsheet point of view when it comes to your profitability. I think it should be part of your overall offering.
I mean, also just thinking about you can charge a premium on rents for sure if that's brand new. The young couples, like you say, that you mentioned there, they might want a dog, they've got maybe 1 or 2 young kids, or they're planning on having a family. Those people will be more inclined to put a deposit down, a rental deposit that is, on something that's brand new. It's a bit more modern. They just will, even visually from the outside. It's more up their street. It's more to their taste, isn't it?
Yeah. It is, because the modern family, if you are moving into a house now and you got your children in particular schools, and you are moving in there, you, over the next 5 years, most likely one of you will have an electric car. So you want somewhere to plug it in. You're going to work from home 1 or 2 days a week. So you want a garden, you don't want a flat. And with flats, it's the service charges. Under the tenant reform, you want a dog. And having your kids at home in the summer holidays, letting them play in the garden with the paddling pool with the dog, you can work in the lounge, you keep an eye on them, they can't escape, so you got less worry. Your heating costs, which is going to be the big problem this winter, because it's new build, the ones that we've been buying are B rated. You know, we've been back and checked with those tenants, and they're going, these, how we've hardly had the heating on, Rog. You know, it's made such a difference. They've come from one of the guys had come from a Victorian area of Bearwood in Birmingham, and his heating costs have gone down 80%, but his rent cost has gone up because he's paying more for this new build. But overall, the quality of life just feels better. I'm not moving away from Victorian properties, but I'm just saying people like that freshness and the news. So I'd say, Terry, take a re-look at new build.
Yeah, it's a good shout. I think a lot of the listeners will respond to that as well. I think that's a great shout. Any other opportunities or any other things to stay away from? I like the HMO thing. I'm into HMOs, as you know, and I'm buying a few more. Any other opportunities or any things that people need to be really aware of in your opinion, in terms of landlords, that is?
Well, let me go back about, I think it was about 9 years ago, to a holiday in Newcastle. And I've always believed in education about what is a buy-to-let, how does it work, what are the structures of ownership, so limited companies, personal ownership. So first of all, if you're buying a buy-to-let and you do not understand between the structures of ownership, so limited company SPVs, what are the pros and cons, the fact that they can offset 100% of interest, or buy-to-lets in personal names. So have you got them as joint tenants or tenants in common, and what's your current tax threshold? And then it's about understanding the different types of property, your standard buy-to-let, your flats with service charges, you've got your HMOs, you've got your holiday lets, you've got your short-term lets. And it's about really understanding that. And I remember young Terry being on that course.
Yeah.
What you wanted to do at that time was to understand every aspect of owning a property. And what you did was, you, instead of just, I want one, you broke down every single component and fully understood it, from both the mortgage side, from the structure of ownership, the tax advice, the property, its location. You did your research with letting agents at what the rental demand was. You know, go to a letting agent and say, where would I buy? You know, if you're new at this, go to a letting agent and go, where's the most demand? I find, like in the Midlands, and it's the same with Stockton, it's by a hospital, because there's so much transient staff within the NHS, and doctors want to be as close as they can to that hospital. And what they want is a house which has got all the mod cons, PlayStations, coffee machines, spend some money on them. So if you're looking for top tip, it's buy properties near hospitals and aim them at the professionals who are they just haven't got the tap. They get paid a lot of money, but they want to be near the hospital in a safe, controlled, luxury environment. But what you did, Terry, was you learned and you understood the market. And you specifically then started to focus on different aspects of the market. So don't buy unless you fully understand what it is that you're buying, where you're buying, and how. And my best advice is see a tax advisor early on. The tax advisor will start you on that journey, that when you get to your end destination, you won't lose money.
Yeah. Again, plenty good advice in there, and there's an analogy that always comes to mind with what you said there, and I do try and do this in every business I'm involved in. I don't need to know everything. Going back to the original point, you can recruit people to help you with your weaknesses, but I personally need a good understanding of what I'm going to do before I do it.
Yeah.
Because then, you know, I think it's pretty foolish to jump into a business a certain type of business or start investing your money. You know, you see loads of crazy people investing in Bitcoin and they don't understand it and doing things they don't understand.
Yeah.
For me, just the way my brain works is I have to understand it before I do it.
Yeah.
So yeah, I did a great course with Roger. Highly recommend if Roger does anything like that, you know, try and attend. You know, he talked me through the difference between personally owned and SPVs, which was a relatively new thing at the time, wasn't it? Because this was a good few years back. But yeah, I then sold the properties that I owned in my personal name, and then I set up an SPV and started to purchase heavily in an SPV. But without speaking to somebody, getting guidance from someone who knows the stuff or who's done it before, I think is where people will then start to get caught out. So if you've got your higher rate taxpayer and you've got some properties in your personal names, then you're on a variable or you're on SVR or something crazy and those jump up, like you weren't making much profit before, you're definitely not going to be now. It's because they've rushed into it without understanding the options and what's actually going on. And I think that's a really, really important point in every type of business and in every venture that anybody gets involved in. Don't rush it. Make sure you spoke to people who've done what you want to do, or who are where you want to be before you jump in. I think that's a really, really good point. Really good point. What is there any well, sorry, just going back a step, I wanted to ask about Precise, because anybody in financial services or in the mortgage world will know Roger, because you've seen him on a stage or you've seen him talking from Precise, or seen him handing out pens or whatever you hand out in those little events, Rog. You know, you would have heard him speak, or you'll know what he's achieved at Precise. Just is there any advice or lessons that you've learned throughout the Precise journey that you could share? Because there'll be people listening who maybe are from a corporate background or who are in a professional job. It's not just property people who listen to the show. So is there any advice that you can give from being in that going from business to corporate, first of all, and then being at a high level corporate that you've learned and that you could share? I think that would be interesting.
Yeah, when you're building a brand, Terry, you can't build it from a classroom. You can't build it from a boardroom. You've got to build it from the trenches. You've got to be out with the end customer. So in my world, it was the broker. So I needed to be at as many events as possible, to do as many meetings as possible in people's offices, brokers' offices. You know, I remember meeting you a few times, Terry, in different offices. By being at the forefront of what you, the broker, wants, by knowing where your service is, by taking those phone calls, and even right up to the end, I'd maybe take 30 phone calls a day. It's more emails now than it was 10 years ago. So if you've got a problem with a case, it's Rog, can you help me with this? 10 years ago, it was phone calls. So it is, life has changed, where I would have been on the phone all day sorting out cases. Now people know if they email you, you'll get a faster response, because if you're in a meeting, you forward it on. And what I did was, we wanted to develop a lender, a specialist lender, that was 100% focused on the intermediary. So it meant you couldn't come direct. So we had to work out, by asking the intermediary, by asking the broker, what is it they wanted, and delivering on what they want, which was the assurity of a decision, the confidence in the brand, and something that they identified with. And by doing those events, and the big thing is, you've got to give something back. So education, I will give education that will teach you about buy-to-let, and you can go to any lender, absolutely any lender. However, in your mind, I have ensconced myself into your brain that I was the person who helped you. And there's that loyalty where possible, subject to rate, will get the right thing. But what you have to do, and that's why I started the social media with LinkedIn, was you've got to connect with people, show people you're having a fun, show people you're around there, and give them ideas. And you, from that foundation, and you've got to have the right team around you. You know, we had an amazing team, Jamie Pritchard, amazing sales team, and Alan Cleary had that confidence to go and let his team do what they do best. So if you've got someone brilliant in your business that is awesome at what they do, let them go. Let them go. Let them be them. Because if you try and teach somebody or steer somebody in a direction that you are not skilled in, the outcome will not be the same than if you just trust them. Let them go and trust them. Obviously, you've got to have care, responsibility, and compliance, everything else that goes with it. But having the right team in the right place, just let them do what they've got to do.
Yeah, more gems. I think a couple of things I picked up on that. I think that last point you made, I just had a conversation with one of my staff actually last week, and it was a one-on-one. It was an annual review, and I said, "How do you enjoy? How you feeling working here? Are you enjoying it, etc." She's over the moon. She obviously loves it working for me, obviously. But one thing she said, she went, "You don't micromanagers," and I think micromanagement, I think, is maybe a little bit of something in the past, because people are different now. You used to be able to rule with an iron fist and tell people, do this now, this is what you need to do. Now people are generally a little bit more educated and a little bit maybe softer, or they know the rights. You can't really act like that. But it's not just that. You actually, I mean, this lady in particular is flourishing, probably one of the best hires I've ever made. She said, you're getting the best out of me by letting me be. And yes, you've got to trust them, but I think maybe checking up on them initially, but then once you've got a little bit of trust, just let them be and let them be them. Like you said, people flourish, people develop, you get the best out of your team, and Precise wouldn't be what it was without you, and it wouldn't be what it was without the team either. And I think that's one point I picked up. And the second one you said at the start there was around educate. You said, Precise, you had to get in front of people, you had to get in meeting rooms, you had to get to events, you had to speak to the brokers. If you've got a business, and I think applies to a lot of businesses, certainly if you're customer facing, get out there and speak to people. You were gaining trust. When I first heard you speak, you got my attention, and I thought credibility when I heard you speak, because you've been there, done it, you speak very well, very knowledgeable. People will then naturally warm to you and warm to Precise. And whether that's in whatever type of business that people have who are listening, I think that's a real good lesson there. And the learning point is get out there and speak to people, because it doesn't really matter how good Precise was at the time. If you weren't telling people about them, how they're going to even know about them?
Yeah. And I think, Terry, you're human. We are now in a world where we start relationships and end them with a text. We communicate by email. We do Facebook. How often you will see young kids, teenagers, just sat doing this over the phone, and not speaking to each other. More now do we see the desire for concerts, events, sports events, the theatre, where we physically go and enjoy it. We could watch Newcastle win on the weekend on TV, but isn't it better there to be, at the Toon in St James's and listen to the atmosphere? Never underestimate human contact, picking up the phone and going back to those values. You don't have to do it as much as we used to, but the looking somebody deep in the eye, you will get their mental state. You'll never pick that up on a text or a phone call. I helped somebody at the weekend, and if I hadn't have been on a Zoom call, FaceTime, I wouldn't have been able to read their eyes to know there was something wrong. And I was able to then change the direction of their life just by being able to see them. So by being able to go into someone's business, where their brokerage, see their desk, see their working environment, you'll learn so much more about them. And then sit and say, what have you got on your desk? I'll place it wherever it is. I've got a foundation case. Well, let me have a look at it. I know foundations underwriting as good as they do. Have a look. Yeah, that'll work with foundation. Or you might want to think of this, not for us as a lender, but you might want to do this. And I think, don't try and take every piece of their business. Only take what's right, and what's not right is help them place it somewhere else. People will always ring me and go, Rog, what do I do with this? And I'll go, right, this is what you need. This is what you want to get. Get me this, and then come back to me and I'll tell you what to do. And then by the time they've got those facts, they come back and go, I know what I'm doing now. I'll do it with this. So let let people think for themselves, to show them how to think.
Yeah, I think that's great advice. For when you were saying that, I was thinking about other BDMs, and you actually done something similar to me. I remember bringing a case to you when I was doing mortgages, and you were like, "Well, it's not one for us, but if we tried this, this, and this, you need." And I think that's a really powerful way of actually selling as well. If you're selling a particular product, if you're honest with your customers, whatever type of customer that is, and say that's not one for us, you might be better going to such and such, but what we can do for you is this.
Yeah.
That's a really powerful way, because it doesn't, from the customer's point of view, it doesn't feel like you're just trying to sell them your product. You're being honest, and you're actually thinking, well, you could try this. You're helping. And in turn, that probably builds your reputation with that person higher than just trying to push their product or saying, "Oh, I'm not sure," because you don't want to give the business to a competitor. And I do actually remember when you did do that with me at least a couple of times when I've rang you in the past.
And Terry, with the iPhone now, what I'll do now is I can't do it now because I'm in between jobs, but I would have my favorite BDMs from other lenders in the phone, and I'd hang on a second, Terry, let me ring Nathan now, or let me ring Jamie, and I'd put him on the call, and I'd go, Jamie, right, he's got this deal, daddy-da, will you do that? Brilliant, great, right, my work's done. Right, Terry, I'll leave you with say whoever it is, and then you send the call. So you put them through, made them feel special, helped them, and that's such a powerful thing, because they're going, it leaves, and you build an integrity in a brand, and then people will then get back. In financial services now, you've got to get the rates, everything, the value of the customer. But if you're there or thereabouts, or you've got service problems, you'll build in more goodwill. And I think it's just about do to others as you would be done by yourself. So think about what is it you want, particularly on a Friday afternoon when someone emails, someone says, we can't do this case, and you're going, oh God, my busiest time in financial services is between 5 and 7 on a Friday, picking up other people's problems that they just didn't want to do. And BDMs who disappear. You got a BDM who just doesn't return the phone call when there's problems.
That's nothing worse.
Delete them.
I can think of a few of them. I can definitely think of a few of them. I'm glad I'm not a mortgage broker. Well, I'm still, I don't know if I haven't got a mortgage brokerage anymore, which I'm glad about, because that's one thing I didn't like. But Roger, it's been a fantastic episode. It's been full of loads of gems, loads of lessons, loads of key points. I think people in financial services and outside of financial services will learn from something from the episode. If anybody wants to reach out to you, Roger, if anyone wants to get in contact, he's a great person to speak to if you are just wanting a bit of advice on building a portfolio, or anything mortgage related or financial services related. What is the best way for people to reach out to you?
I think the easiest way would be to go onto LinkedIn and just message me on LinkedIn. So Roger Morris on LinkedIn, or email me at roger08@me.com.
At me.com. Perfect. Well, Roger, thank you so much, mate. It's been a great episode. I appreciate your time today.
Thanks, Terry, and thanks everybody for listening in.
Thanks, mate.